Hello, everyone, and welcome to another edition of Honeycomb Digital Investments, the Regulatory Buzz. My name is Baxter Hines. I'm the Chief Investment Officer here at Honeycomb Digital. And again, I'm honored to be here today with Carol Goforth, a professor at the University of Arkansas. How are you doing today, Carol?
I'm doing great. Pleased to be here with you.
Pleased to be here with you as well. I want to talk to you about a really hot topic today, and that is the legislation that is coming around on stablecoins and other CBDCs. There's a lot of talk about what do we do with dollars that are being traded on the digital rails, especially in light of last month's debacle with the Terra Luna stablecoin. It was a very fast and very furious decline, or I should say collapse, in the price of both of those assets, where they were using an algorithmic method to secure the price of UST, its stablecoin, to $1. When the peg broke and the price went below $1, it started falling, and the volume on it started getting just more and more vicious as time went on. And when I say time went on, in a matter of about a day or two, it was lights out. And this was no small potatoes. When Lehman Brothers fell in 2008, it was something like a $50 or $60 billion market cap. Terra Luna in aggregate was around 50 billion. So this was money that just went poof on people's balance sheets, literally overnight, caused a lot of heartache, and it caused a lot of regulators and people on the regulator and legislative side to get involved in this and say, hey, we need to do something. So wanted to get your take of what you're seeing, because it seems like this issue is coming to a head, that we've got to, in Washington, come up with some kind of rules by which these stable coins are governed.
I think you're right. This is bringing things to a head. It's actually not uncommon for there to be a regulatory or a legislative reaction when there is an event that triggers lots of headlines, and a loss of this magnitude in the financial markets is certainly something that captured the attention of commentators and obviously regulators and legislators as well. One of the things that I think it's really important, and not everybody is going to understand at the outset, is what you mean when you say this is a stable coin that is algorithmically controlled. There are actually different ways that a stable coin can keep its price stable. One, and this is the way that Tether and US dollar coin work, is that they can actually maintain reserves so that they can offset the value if there's a loss by using these reserve assets to bolster or to keep the price down when there is an influx of interest. So those are coins that the price is kept stable through the means of an actual reserve of things like US dollars, things like treasury bonds, other financially secure assets. Now, US dollar Terra did not do that. Instead, they had a computer program that was designed to, they had a very unusual one. They had a separate crypto asset, Luna, that was coordinated with their Terra trading, and it worked so that the computer program was supposed to automatically offset the increase in interest by destroying some of their assets, by decreasing what they were holding. It was all supposed to be done automatically. This was not the first algorithmic stablecoin, and it was not the first algorithmic stablecoin to fail. It was the first to be this large in value, to have this much visibility, this much value disappear this quickly. And one of the things that I am seeing is that because algorithmic stablecoins are not really well understood by folks who are kind of at the fringes of the crypto space, is that some of the regulatory responses I'm hearing about as potential, say, oh, we need to shut down these stable coins. Oh, we need to make sure that stable coins are backed dollar for dollar with US dollar reserves. Well, not all stable coins are pegged to the US dollar. Not all stable coins are pegged to reserves. Yes, there is a problem with algorithmic stablecoins to date. That doesn't mean that there isn't a basis for exploring as technology becomes more sophisticated, as the understanding of the markets becomes uh, more complete. To say that we can't even explore algorithmic stablecoins, I think would be a mistake. To say that these assets have to be backed only by dollars would be a mistake. Um, on the other hand, the response that says that certain kinds of stablecoins need to be better understood, better described, better backed, better guaranteed through insurance, I understand that. I agree that we are probably going to see some regulation in this space. The United Kingdom has taken the step of saying that their central bank should go ahead and put in place requirements. They have an odd dichotomy saying that if it's an algorithmic stablecoin, it's got to be regulated this way. If it's just a payment stablecoin, and it's like, you know, that's not the way to divide the world of stable coins. One is looking at how they are pegged and one is looking at how they are used. So it's really not a fair way to divide them. I think they're going to have problems with that approach. And I think it is symptomatic of the reality that it's a hard thing to wrap your head around if you're not actually the person doing the programming for these things. And it's a very technical, very sophisticated kind of computer program that you're talking about.
Totally agree with you. And I think that, again, because of the magnitude of this, let's call it again a debacle with Terra Luna, it's caused the general public and the media to really lose confidence in stable coins. And that is a shame because they're obviously they're right to do that because a lot of people lost a lot of money and this was not handled properly. But the general idea of stable coins has so many benefits, whether it's helping have instant settlement for transactions, lowering costs, just it really alleviates a lot of the frictions and the inefficiencies that are present in today's financial system. And so you're seeing all kinds of big players in the industry looking to utilize this blockchain technology to make payments better. JP Morgan's talking about having their own stablecoin, or actually I think it has their own stablecoin. You've got Wells Fargo doing the same thing. Walmart is looking to create their own US dollar on the digital rails. And what I think is a good way to help solve this is if you have some kind of regulation that some of these bigger, more sophisticated players who have a larger reputation to protect, they're going to make some certain stablecoin products that will help to alleviate this situation so you don't have these sort of fly-by-night or just more in their infancy type of projects coming along that are potentially unstable, and that's what we need. That's why we really need this regulation to clean up that type of situation.
I think one of the things that people lose sight of is there was this huge collapse for one stablecoin. If you go to any of the websites that maintain pricing data, the value of US dollar coin is still $1. The value of US Tether is 99 cents 0.93. I mean, so almost $1. Now, the total market capitalization of those assets has shifted, but the value, the pricing of the reserve-backed stablecoins is in fact still stable. One of the things that I think happened is not just that folks lost confidence in stablecoins, but they hear about the collapse of the Luna token, the collapse of this other crypto asset. And it came at a time when there were also other market forces in play, and it has created a huge downward pricing pressure on the entire crypto market. So, Bitcoin is down around 30,000 per coin. if we've gone back 3 years when somebody to say the price of Bitcoin is down to 30,000, how could that be down? That's a
Right.
huge value. And there is still a huge value and a value proposition in crypto. It is a volatile market. It has always been a volatile market. And that very volatility is also what gives you the potential for great gains, but it does create the need for a stable crypto asset or group of crypto assets, particularly those, as you mentioned, that come from large, sophisticated players. And I'm particularly gratified to see US dollar coin as gaining in market share, simply because I think it has a better history of being transparent and well maintained. So I'm not surprised at seeing it doing well, even
Yeah.
in these kind of uncertain times.
Yeah, stable coins, it all comes down to how they're built and what is backing them up. And when I say backing, I mean reserves or the mechanism. I liken this a lot to the story of the three little pigs. One little piggy makes his house out of straw, one makes it out of wood, one makes it out of brick. And when these turbulent market forces come, i.e. the big bad wolf, the ones that are made out of straw, they fall down very quickly. And that's really what Terra was, in my opinion. So we've got to build things better. And I think that regulatory clarity will allow these key players to decide that it's worth getting into the market and providing this essential service, which is a stable dollar on the digital rails, which can provide, again, better settlement, better cost, less friction, less risk. We need that in our financial system. And so getting the draft bills out and getting them through Congress, getting it done correctly is going to be a major step forward.
I agree. I am concerned about the possibility of an overreaction. Their approach that says we're going to ban this kind of asset, we're going to mandate this kind of structure. Again, my personal preference is for the general approach of the CFTC, which allows self-certification to demonstrate compliance with kinds of principles, and the idea that we will build this in a way that is transparent, and we will build this in a way that has sufficient stability and sufficient transparency and sufficient guarantees or insurance and sufficient reports that you can tell what's going on, and mechanisms designed to stop tremendous downward pressure, either through actual reserves or through something better than the mechanism that Terra had functioning for it. So I'm hoping we have a balanced regulatory approach. But again, I completely agree that regulation is a good idea if it's done right.
Yep, got to move correctly. That's the key. This is too big of an opportunity to botch from a regulatory standpoint.
Hope so.
Well, thanks again for being here today, Carol. Really appreciate your time, and we look forward to seeing you on another episode.
Absolutely.